Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now this is the last and final video on problems of income from other sources. The last three problems, 10th, 11th, 12th, I'm going to finish off. So hope all my regular viewers have already watched the earlier videos. Now you are in a position to attempt the problems on how to compute income from other sources according to the provisions of Income Tax Act for the assessment year 2021-22. If you have not watched, I suggest you to go to the playlist of my channel. Select the subject Advanced Aspects of Income Tax, unit number 2. Watch the initial videos, you'll be perfect with the provisions. Then you can watch and understand this video. Now in this problem, before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So always keep the problem set ready, otherwise you cannot be able to understand the problem. Understanding the problem is half solved. Don't concentrate only on the solution. First try to understand the problem by having a hard copy. Take a screenshot of the solution of the notes which I have written on the board so that you can have a permanent copy of these solutions. Then I'll explain the problems. Come on viewers, I am reading out the 10th problem now. Mr. Vijay, captain in Indian Air Force, was killed during Kargil war and his wife is receiving 10,000 rupees per month as family pension. Determine her tax liability. First of all, family pension is taxable under the head income from other sources. But in the theory video, I have already explained you that if family pension is received by a person, if family pension is received by the widow or children of the deceased person who worked in paramilitary forces or defense services or air force and died during any international war or against the war against the extremists, or they have died in during natural calamity, emergency services during natural calamities. So during these operational services, if the person dies and the widow or children receives the family pension, it is fully exempted from tax. So these are the exceptions where family pension is exempted. First case, the person should be in service. The deceased person was in service in Indian Defense Service or paramilitary forces or Air Force. In this Navy, if the person was serving in these areas and died during emergency, during war period, then in that case, the widow or children, what they get family pension is completely exempted. So in the present problem, it is given Mr. Vijay, captain in Indian Air Force. So the deceased employee was working in Indian Air Force and was killed during the war period, international war period. That means the widow, whatever family pension the widow will get, it is completely exempted from tax. No tax liability. So here I have written the tax liability of wife of Mr. Vijay is nil. No tax liability. According to section 10 subsection 19 of the Income Tax Act 1961, pension received by family member of deceased member of Indian Defense Service is fully exempt from tax if he died in war or in operational duties in the emergency situation. So if the person died in operational duties or during war or during emergency services, in that case, the widow, whatever family pension she gets is completely exempted from tax. Mr. Vijay was the captain of Indian Air Force and he died during Kargil war period. So that means the family pension received by the widow will be completely exempted, no tax liability. That's it. Now, 11th problem. Mr. Surjit was working in Indian Navy. Mr. Surjit was working in Indian Navy. He died while in service. his wife Srimati Swarup Singh receiving a family pension of 20,000 per month, determine her taxable income. Now here in this case, the deceased person, Mr. Surjit, was working in Indian Navy and died in service. In service means the family pension will not be exempted because he died in normal circumstances. Not during war period, not during emergency period, not during operational service. He died as a natural death. So while in service, if the person dies as a natural death, then family pension received is fully taxable. It is not exempted. So in the present case, Mr. Surjit died in normal circumstance. The wife of Mr. Surjit, Swarup Singh, it is taxable pension. So here, computation of taxable income of Srimati Swarup Singh for the assessment here. Family pension, she received 20,000 per month given in the problem. So 20,000 into 12, 2,40,000. Standard deduction. For any SSC who is getting family pension, deduction will be allowed under section 57(2)(a). List of the following two: 1/3 of pension or fixed amount 15,000, whichever is less. So 1/3 of 2,40,000, 80,000, or fixed amount 15,000. Whichever is less, 15,000 is less, that will be deducted. So 2,25,000 is the taxable income in the hands of Srimati Swarup Singh. If the deceased employee was working in Indian Defence Service, he died in normal situation. Hence, family pension received to his wife become taxable income. Explanation also you have to give in examination. Last and final problem. Mr. Sunil died on 31st July 2020 while being in central government service. In terms of rules governing his services, his widow Mrs. Sunil is paid a family pension of 20,000 per month and dearness allowance of 40% thereof. State whether the amount of family pension is assessable in her hands, and if so, under which head of income. Can she claim any relief or deduction on such receipt? Compute taxable income for the assessment year 21-22. First of all, the family pension received by Mrs. Sunil is fully taxable because she was not serving, Mr. Sunil was not serving in defense service or navy or air force and died during emergency service or war. It's not like that. He was simply working in a central government department and he died as a natural death. So the wife receiving family pension is fully taxable under the head income from other sources. And it is asking you, can she claim any deduction? Yes, she can claim the deduction under section 57(2)(a), 1/3 of pension or fixed amount of 15,000. That is our answer. It is asking you to calculate the taxable income. Computation of taxable income of Mrs. Sunil for the assessment year. Family pension 20,000 per month into 8 months. The new point. Mr. Sunil died on 31st July 2020. Our previous year begins from 1st April 2020. Assessment year is 21-22. Previous year is 2021. The previous year started from 1st April 2020 and ends on 31st March 2021. This is our previous year. Now at the beginning of the previous year, Mr. Sunil was alive. That means April, May, June, July. On 31st July 2020, he died. That means Mrs. Sunil will get the pension from 1st August. Because up to 31st July, he was alive. The pension will start from 1st August 2020. So now count how many months she will get the pension. August, September, October, November, December, January, February, March. 31st March, 8 months. So 8 months she will get the pension. 20,000 into 8, 1,60,000. And it is given dearness allowance 40% of pension. So 40% of 1,60,000 is 64,000. The total pension Mrs. Sunil will get is 2,24,000. Now standard deduction, she is eligible under section 57(2)(a). Least of the following two: 1/3 of pension. So 1 by 3 into 2,24,000, 74,667, or fixed amount given by Income Tax Act, 15,000. So whichever is less, 15,000 is less. Deduct 224 minus 15,000, 2,09,000 is the taxable income in the hands of Mrs. Sunil. That's all. The explanation I have given, Mr. Sunil died on 31st July 2020. The previous year ends on 31st March 2021. Therefore, pension will be received by Mr. Sunil from 1st August 2020 to 31st March 2021. That is 8 months. Now, family pension is taxable because Mr. Sunil died in natural circumstances. And family pension is taxable in the hands of Mr. Sunil under the head income from other sources. Standard deduction under section 57(2)(a) will be allowed up to rupees 15,000. Maximum deduction is 15,000. That's it. So these 12 problems are on the computation of income from other sources. All 12 problems I have explained you in detail. So if you are satisfied with my lecture, give a like to the video. Share my channel in your group, in your friend circle, so that more students can watch the video and enhance the knowledge. Subscribe my channel if you have not yet subscribed. And one more thing, I have started a second channel by name Khan's Accounting Institute. The link is given in the description. So please go to that channel, visit the channel, subscribe my channel, and that channel is for IGCSE students. I got many requests, many suggestions from students pursuing IGCSE course, Cambridge or Edexcel. So for them, I have started a new channel. You too can gain the knowledge from that channel. I have uploaded so many videos. So visit the channel, subscribe to that channel too. Inshallah, we'll take up the next topic in the next video.